Dear all, a very good evening to all of you. I am Kajal Wahi. On behalf of Texo team, welcome all our attendees on the special webinar on recommendation of 55th GST Council meeting. Before we start the session, I would like to share the new features of Texo Online. We have updated case law library with over 10,000 judgment with intelligent multiple search option. You can find notification circular with intelligent multiple search tool. We have also updated the model draft reply of key notices and research on contemporary issues. Next is our Ask GST query feature to get concept clarification. Also, we have an intelligent rate finder for goods and services, practical case studies on 26 sectors. With that, all 174 sections interlinked with acts, rules, notifications, circulars, FAQs, commentary, illustrations, and cherry picked case laws. Daily updates to subscribers via WhatsApp and email. All the features are available at a very affordable price only with Texo Online. We Texo family are honored to get your support to make our journey meaningful. We are grateful if you could get the reference, and for the reference, you can just contact at texo.online. Now, I would like to request C. Anmol Gupta sir to kindly moderate the session. Sir, please welcome.
Thank you, Kajal, for giving me the opportunity to start today's session. Friends, today's session is very important, a very special session we have because we have with us Shri Upender Gupta sir as a speaker for today's session. As you all know, Upender sir was the key force behind conceptualization and drafting of GST law. And today we have the privilege to get time from Upender sir to get insight on recommendations of 55th GST Council meeting. Though we all know what a great personality and what a great academician Upendra sir is already is, but I would like to just give you a brief about the sir. CA Upendra Gupta ji is a 1990 batch IRS and recently retired as Chief Commissioner of CGST Panchkula Zone. Upendra sir holds multiple professional qualifications being chartered accountant, cost accountant, company secretary, and a law graduate. During his tenure of 33 years working in indirect taxes, Sir has led introduction of GST in the country in July 2017, and for his efforts, he was also honored with Prime Minister's Award for Excellence in Public Administration as well as Presidential Award of Appreciation Certificate for Distinguished Record of Service. Before starting the session with Upendra sir, I would like to take a moment to apprise you all that today's session we are conducting jointly with Haryana State Tax Bar Association. And I would like to invite Advocate Naveen Gupta ji, who is the President of Haryana State Tax Bar Association, to say a few words to the participants. Naveen Gupta ji is a very prominent tax practitioner and associated with several committees of PSUs and trade or industrial association as legal or taxation advisor. He is also connected with several CSR activities in Delhi NCR. Naveen ji, I would like to request you to say a few words to our participants today. Naveen ji, can you hear me?
थैंक यू वेरी मच अनमोल जी। आज आपने जो ऑलरेडी जो है हरियाणा स्टेट टैक्स बार को जो है इस सेमिनार्स के अंदर जो है ज्वाइन किया है, मैं मिस्टर अनमोल गुप्ता सर का भी जो है बहुत बहुत धन्यवाद दूंगा कि उन्होंने जो है अपना कीमती समय आज व्यापार जगत के लिए और इंडस्ट्रीज के लिए निकाला कि जो 55th जीएसटी काउंसिल के अंदर जो अमेंडमेंट्स हुई हैं उससे रिलेटेड जो है सबको थोड़ा क्लियर कर पाए कि एक्चुअल में गवर्नमेंट ने इस पर क्या क्या फायदा जो है व्यापारी वर्ग को दिया है। और मैं टैक्समो का भी धन्यवाद देना चाहूंगा कि वो इस तरह के सेमिनार्स जो है रेगुलर बेसिस पर कर रहे हैं, जिससे कि व्यापारी और इंडस्ट्री सेक्टर्स को जो है काफी मदद मिल रही है और डे टू जो प्रॉब्लम्स हैं, डे टू डे अमेंडमेंट्स हैं, उन सब से जो है वो अपडेट कराते हैं व्यापार जगत को। कि मैं मिस्टर मनोज का और उनकी पूरी टीम का जो है हरियाणा स्टेट टैक्स बार एसोसिएशन की तरफ से बहुत बहुत धन्यवाद देना चाहूंगा कि वो इस तरह के सेमिनार आयोजित करके व्यापारी वर्ग के अंदर और सरकार के बीच एक सामंजस्य का काम करते हैं, जिससे कि व्यापारी वर्ग को सरकार की जो जो नई जो पॉलिसीज हैं उनके बारे में अवगत कराया जाता है और समस्त हरियाणा के जो है टैक्स बार के एडवोकेट्स जो आज इसके साथ जुड़े हुए हैं, मैं उन सब का भी धन्यवाद करना चाहूंगा कि उन्होंने आज इस सेमिनार को सफल बनाने के लिए अपनी अपनी तरफ से योगदान दिया है। और मैं उपेंद्र सर का जो है बहुत बहुत हार्दिक धन्यवाद देना चाहूंगा कि उपेंद्र सर जो ऑलरेडी जिन्होंने की ड्राफ्ट के अंदर भी रहे हैं, और वो उनको पता है कि व्यापार जगत को कैसे कैसे कहाँ कहाँ प्रॉब्लम्स होती है, तो उनके सानिध्य के अंदर जो भी अमेंडमेंट्स होती हैं वो काफी जो है व्यापारियों को फायदे पहुंचाने वाली यहाँ होती हैं। तो इन सब के लिए मैं आज जो है हरियाणा स्टेट टैक्स बार एसोसिएशन की तरफ से धन्यवाद देना चाहूंगा। अनमोल जी, आप प्लीज।
Thank you, Naveen ji, for your valuable words. And now, friends, without taking much time, would like to request Upendra sir to take today's session forward. But friends, prior to starting the session, would like you to request you all to kindly stay on mute. And also, whatever queries you have, please enter your queries in the chat box. And at the end of this session, Upendra sir will take all your queries one by one. Sir, please welcome, sir.
Thank you, Anmol. Thank you, Naveen ji. And at the outset, I would like to thank you, Texo, for inviting me and giving me this opportunity to give my perspective on the recommendation of the GST Council made in the 55th meeting, which was held on 21st of December at Jaisalmer. So I would like to divide the recommendations in about 8 to 9 parts. Namely, first I'll talk about what are the proposed amendments in the law on which the recommendation have been received, the clarifications relating to law and rules, the proposed uh, structure on the restaurants, the recommendation relating to RCM on services. Fifth one is relating recommendation on the gift vouchers. Sixth one is the clarification which have been recommended by the council related to services. The seventh one would be about the tax rates. Eighth one is miscellaneous. And ninth one is on what issues the discussion was done but has been deferred to be discussed and further discussed in the next council meeting. So coming to the first issue relating to the amendments in the GST law. So the first recommendation which the council has made is with respect to the proposed amendment in section 107 and 112 of the CGST Act. As you are already aware that these sections talk about the requirement of pre-deposit with respect to appeals being filed before the first appellate authority or before the tribunal. So the council has recommended that as against the 25% pre-deposit, which is required to be done only with respect to the cases involving appeals against the order passed under Section 129, the pre-deposit would be reduced to 10% instead of 20%, 25%. And similar kind of pre-deposit will have to be made in such cases if the appeal is to be filed in the GST appellate tribunal. The second recommendation with respect to law changes is the amendment in section 17(5), which relates to the block credit. You are aware that recently there was a decision of the Honorable Supreme Court in Safari Retreats, wherein the Supreme Court has laid down that the functional test would be applied on the buildings and such like structures, whether they will act as plant on the ground that in the section 17(5)(d), the word plant or machinery is used, whereas elsewhere in the section and even in the explanation in the subsection, the word plant and machinery has been used. So the council, in their wisdom, has recommended that this plant or machinery should be replaced with plant and machinery so that the same words, same nomenclature is used throughout the section 17(5) and there is no further litigation. It has also been proposed that this amendment would be done with retrospective effect from 1st July 17. It was mentioned even in the press conference that there was a drafting error and the intention has always been that the word plant and machinery should have been used. So this is the amendment which has been proposed with retrospective effect by the council. So in a way, the Safari decision gets nullified after this amendment, and the intention that the credit would not be admissible if the buildings plan, if buildings, other structures are constructed, no credit would be admissible. That is what the amendment would effectively mean, and the requirement of testing, functional test, etc., will not be there. The third amendment which has been proposed is with respect to the definition of local fund and municipal fund. Section 2, subsection 69 talks about the definition of local authority. And the local authority, as has been defined in the law, means a municipal committee, a Jilla Parishad, district board, any other authority legally entitled to or entrusted with by the central government or the state government with the control or management of a municipal or local fund. There were disputes, what do we mean by municipal fund or local fund? So that has not been defined in the GST law. The council has now recommended that a explanation to define municipal fund or local fund may be inserted in section 269. So that is the amendment. The next amendment is with respect to the ISD provisions. As you are aware that the ISD provisions were rewritten, and the amendment has already been done in the CGST Act with respect to ISD provisions, the definition of ISD, section 20, the manner in which the ISD would be able to distribute the credits. And those amended provisions are to be brought into effect from 1st April 2025. So apparently there was a doubt that because the IL section 20 talks about the RCM leviable under section 9.3 or 9.4 of the CGST Act only was mentioned. So probably there were doubts that, the RCM paid on interstate supplies will not be, ISD would not be eligible to distribute debt credit. So to clarify that aspect, what has been recommended is that the section 20 and all other consequential amendments may be done in the law and rules so as to make it explicitly clear that the ISD mechanism would be applicable even for distribution of the credit on RCM supplies, which is leviable under the IGST rate notification issued in terms of section 5.3 and 5.4 of the IGST Act. So therefore, all kind of RCM supplies would now get covered, and the credit thereon would be transferable through the ISD mechanism. The next amendment to the law has been proposed in Schedule 3. Now, the Schedule 3, as you are aware, contains the supplies, the transactions which are neither a supply of goods nor of services. So there is a long list there. One more clause is proposed to be added by way of para 8AA, and that too with retrospective effect from 1st July 17. There were doubts that whether the supplies within SEZ and within the FTWZ, that is free trade warehousing zone. So goods are stored there. From there, the goods are exported or clearance for home consumption to the domestic tariff area. But what happens if some transaction takes place within the SEZ or within FTWZ? Was it subject to GST? So there were doubts, and the industry has been pressing hard to clarify that and to give the equal treatment as is available to the transactions happening in the custom bonded warehouse. So the custom bonded warehouse, the para 8A was already there in Schedule 3, and it was provided that if some transaction happens within the custom bonded warehouse before the goods are cleared for home consumption, that would not be supply under GST, and that is a no supply. No supply neither supply of goods nor of services. So similar treatment is proposed to be extended to the transactions happening within SEZ and within FTWZ. That means if before the goods are cleared for export or for home consumption from SEZ or FTWZ, those transactions would not be treated uh, as a supply of goods or of services. And this amendment is also proposed to be done, the amendment in Schedule 3, with retrospective effect from 1st July 2017. So this is a very beneficial provision for the trade and industry, because there were a lot of dispute, lot of demand have been raised. And now all type of transactions happening in custom bonded warehouse, in SEZs, in FTWZ, would not be subject to GST, being no supply. And you are already aware that the transactions which are treated as no supply, the credit is admissible on related to inputs on those supplies, unlike exempted supplies where the ITC is not available if you are engaged in making supply of some exempt supplies. The next amendment is with respect to rules. The rules is with respect to the grant of temporary GST to persons not liable for registration otherwise. So there has been problems that if some transporter has to pay tax or a unregistered person has to pay tax, how does he pay the tax? Because all taxes are to be paid through GSTN in the electronic credit cash ledger and thereafter appropriated. So the field was issuing temporary GST to such persons, but now there is a proposal to insert Rule 16A to regularize this practice of the field formations to give the temporary GST, and that will be used only for the payment of taxes by a unregistered person. The next amendment is with respect to the definition of pre-packed and labeled commodities as contained in notification number 1 of 2017 central tax rate. Similar notification is under IGST Act also. The amendment is proposed so as to cover now all the commodities which are pre-packed and labeled as per the definition contained in the Legal Metrology Act, and the pre-packed and labeled commodities have been defined under the Legal Metrology Act as a pre-packed commodity uh, where the package in which the commodity is pre-packed or a label securely affixed thereto, and that package is required to bear the declaration under the Legal Metrology Act or rules made thereunder. So now all sorts of commodities would be covered under the under this pre-packed and labeled by amendment of the definition as contained in the notification number 1, as I said earlier. So the rule changes would be done with respect to the rule changes. The rules can be amended by way of a notification, but the amendments in the law which have been proposed, like no supply, like this plant or machinery to be replaced with plant and machinery, this would be, to my mind, introduced through the finance bill in the next budget, and thereafter the parliament would pass those amendments, and thereafter the state legislatures would amend their respective SGST acts, and thereafter only the law amendments would come into force. But as I mentioned, some of the amendments are being proposed with retrospective effect, namely no supply and the change in definition of the plant or machinery in 17.5. Coming to the next section is relating to the clarifications relating to the law, so that the ambiguity which was prevailing gets removed and the legal disputes can be reduced. The first amendment is first recommendation is with respect to the levy of late fees on delayed filing of 9C. 9C, as you are aware, is a reconciliation statement, self-certified, to be filed by those taxpayers whose turnover in the preceding year was more than 5 crore rupees. So Those taxpayers whose turnover is more than 2 crores are required to file GSTR 9, the annual return. And those taxpayers whose turnover is more than 5 crores are also required to file 9C, a self-certified reconciliation statement. So there was an ambiguity whether a late fees is to be levied on 9C also. So it is proposed that it will be clarified that 9C also, late filing thereof also attracts late fees. For past period, for the period 17-18 to 22-23 financial years, it is proposed that if the 9C is filed by 31st March 25, 31st March 2025, and where GSTR 9 has already been filed, in that case, late fees will not be charged because of the ambiguity prevailing in the among the trade and industry. So 23-24, as you are aware, the last date is 31st December. So for that, 9 and 9C have to be filed by 31st December. If filed late, both late filing of 9 and 9C would attract late fees. For past years, past periods, this waiver has been given with the condition that 9 has already been filed, 9C has not been filed. Now 9C should be filed by 31st March 25. The second recommendation is with respect to the availability of ITC in case of ex-works contract. So the press release says that where the recipient has entered into a contract on ex works basis, that means the recipient would pick up the goods from the uh, factory or warehouse of the supplier, and transportation is arranged by the recipient himself. In that case, it will be deemed that the goods have been received at that point where the warehouse or the factory of the supplier is there. So as you are aware that there is a requirement in the law section 16(2) which says that the ITC is admissible if the recipient has received the goods or services. So to remove the ambiguity, what happens in case of ex works contract? This proposal is there that a circular would be issued to clarify that it will be deemed to be received when the goods are handed over to the recipient or the transporter of the recipient at the business premises, namely the factory or the warehouse of the supplier. The third recommendation is with respect to the requirement of reversal of ITC by the electronic commerce operator in respect of supplies made through them, because Section 9(5) provides that in certain cases, the electronic commerce operator would be required to pay tax on the supplies made through them. For example, in case of restaurant service which are unregistered. Similarly, the hotels which are unregistered, it is the electronic commerce operator like Swiggy, etc., who are required to pay tax on the main supplies itself. And that tax is to be paid in cash by those electronic commerce operator. Although it is not their output supply, but a deeming fiction has been created. In addition to that, the electronic commerce operator also charges commission, etc., from the restaurants or hotels and so on. On that, they are already paying. It is their supply, and therefore they are required to pay the tax. The doubt was whether the ITC is required to be reversed in respect of supplies on which they are paying under Section 9(5). The proposed circular is what has been recommended by the council is that there is no requirement because it is not a exempt supply, and Section 17 or Rule 42-43 would not be applicable in that case. So coming to the next section, the GST structure on hotel accommodation and restaurant service. So you may be aware that I am sure you are aware that there was a concept of declared tariff and specified premises. It was there even for charging the GST on the hotel accommodation, which was removed earlier, and now the GST is applicable on the actual room rent which is being paid instead of the declared tariff. but this concept was being used to determine the tax rate on the restaurant service. So if the restaurant was located in a hotel where declared tariff of any room was more than 7,500, the GST rate on restaurant was different, and if the rate was less, declared tariff was less than 7,500, the GST rate was different. Now it has this concept of declared tariff is proposed to be done away with, and what would be the relevant point would be that what was the highest room rent in the preceding year. So if that actual room rent was more than 7,500, then the GST rate on restaurant service would be 18% with ITC on the restaurant service provided in a hotel. If the room rent was less than 7,500 of any unit in the preceding year, the GST rate on restaurant service would be 5% without ITC. And for some cases, 18% with ITC, a optional rate is also being proposed. So actual thing we will come to know once the rate notification is issued. The next section is with respect to the RCM on services. So two amendments to the rate notification have been recommended by the GST Council. The first is the sponsorship service provided by body corporate. So presently you are aware that all kind of sponsorship service are under RCM, and it is the recipient of service who has to pay the tax. Now what is being proposed is that the sponsorship service provided by body corporate would be subject to tax under forward charge mechanism instead of reverse charge mechanism. And what is body corporate? Body corporate is uh, defined under section 2 subsection 11 of the Companies Act 2013. So the body corporate so defined under the Companies Act, if it is providing a sponsorship service, then that body corporate would be liable to GST on forward charge mechanism. So the notification number 13 of 2017 tax rate, central tax rate notification would be amended to that extent. The second recommendation is with respect to the renting of immovable property other than the residential dwelling. As you are aware that this was brought under RCM, so any registered person getting this renting of immovable property service was liable to pay GST on RCM basis. So the registered person includes the composition dealer also by definition under the CGST Act. So what is being proposed now is that for the purpose of reverse charge mechanism, the registered person will not include composition dealer, meaning thereby that if any composition dealer is receiving the RCM services of the services relating to renting of immovable property other than the residential dwelling, that composition dealer would not be required to pay GST on such renting on RCM basis. So the net effect of the proposed change is like this. So if the service provider is unregistered and he is providing service to an unregistered person, so there is no FCM, no RCM. But if the service provider is registered and it is providing service to a unregistered person, the registered person would be required to pay tax on the forward charge mechanism basis. Now, unregistered person providing the renting service to a registered person other than composition dealer, it would be both were under RCM under the prior to this recommendation and even afterwards. But if the unregistered person providing service to a composition dealer, then presently it was under RCM. The proposal is there is no RCM, no forward charge because the supplier is a unregistered person. So, and it is also proposed, this amendment was brought to bring this service under RCM basis on 10th of October. So, it is proposed that for this period from 10th October till this notification is issued, the uh, the period would be treated as regularized on as is where basis. So if somebody has paid, it's fine. If somebody has not paid, no GST would be leviable. But if someone has paid, then he will not get the refund. That is what as is where basis means. The next amendment, and a big amendment, is with respect to the taxability of vouchers, the gift vouchers. So presently, the gift vouchers are subject to tax. Presently, it is said that if the nature of the service is identifiable, it is taxable at the time of issuance. But if the nature of service is not identifiable, then it would be taxed at the time of redemption. That is what is provided in section 12 subsection 4 and section 13 subsection 4, which deals with the time of supply of goods and services respectively. Now, there have been some decisions, namely of Honorable Madras High Court in case of Kalyan Jewellers in November 23, Karnataka High Court in case of Premier Sales Promotion in January 23, wherein the Honorable Courts have said that the vouchers cannot be treated as a supply under GST regime. Now it is being proposed that it will not be treated as a supply, the issuance of vouchers. The issuance of voucher per se will not be treated as a supply. Section 12.4 and Section 13.4 would be omitted from the law. But so similarly, if the gift vouchers are issued by, let us say, shopkeeper to a consumer, it is treated as a issuance of voucher on principal to principal basis, and it will not be subject to GST. But if there is some intermediary, some agent who facilitates this distribution of the vouchers and he charges some commission, that commission would be subject to GST, but not on the value of the vouchers, but on the amount of commission which is being charged by the agent. And further, if there are any service related to vouchers, for example, advertisement of vouchers, that will give vouchers and some payment is being made for that advertisement, or co-branding of the vouchers is done, or marketing or promotion etc. is being done, so that expenditure would be subject to GST. And if there are some unredeemed vouchers which have not been redeemed so far, they will not be subject to GST. So this is what is the recommendation of the council with respect to the vouchers. Now coming to the next section, it is relating to the clarifications which are being proposed in relation to certain services. So there are two major recommendations which have been made by the council according to the press release issued immediately after the council meeting. First is with respect to the levy of penal charges which is collected by banks or NBFCs. What are penal charges which are levied by the banks or NBFCs? So these penal charges are essentially uh, towards the non-fulfillment of certain terms and conditions of the loan agreement. For example, delayed payment or things like that. So there was doubt whether those penal charges which are charged as penal charges are subject to GST. What is being proposed what has been recommended by the council now is that those penal charges which are levied by banks or NBFCs on account of default by the borrowers with respect to fulfillment of the terms and conditions of the loan agreement, they will not be subject to GST. That is what the circular would be issued. The second recommendation for issuance of circular is with respect to the payment aggregators. So there are payment gateways, there are payment aggregators. So what are payment aggregators? Payment aggregators are basically provide end-to-end payment services. They simplify payment process, they collect information, process payment, and if there are any dispute, also handle refunds. So the proposal is that the payment aggregators would be treated as equivalent to acquiring banks in case of transactions happening through the cards, credit cards or debit cards. So there is an exemption which is available to the acquiring bank in respect of those transactions where the settlement is up to 2,000 rupees, and there is no GST on those, and that commission which is charged by the acquiring bank if the settlement is up to 2,000 rupees. What is being proposed is that the payment aggregators would be treated as equivalent to acquiring bank, and that exemption which is available in terms of serial number 34 of notification 12 of 17 central tax rate would be available to the payment aggregators also. But these payment gateways are a distinct entity, and they are not equivalent to payment aggregators, and they are not given the status of acquiring bank. Coming to the next section relating to the tax rate changes. So some important changes which have been listed in the press release are like this. So first one was with respect to the uh, rice kernels where which are supplied through public distribution system. Present rate is 18%. What is proposed is that the tax rate may be reduced to 5%. Similarly, the autoclaved aerated concrete AAC blocks with a fly ash content of more than 50%, the present rate is 18%. What is being proposed that the rate may be reduced to 12%. The third is relating to gene therapy. The present rate is 12%. It is proposed to be completely exempted from GST. Then long range surface to air missile LRSAM system, as popularly called, is already exempt. What is being proposed is that systems, subsystems, equipment, parts, etc. of such LRSAM system will also be exempt from IGST. Now there is already a scheme for the merchant exporters of 0.1% in terms of notification 40 of 2017, 40 of 2017 central tax rate, and a similar notification under IGST rate 41 of 2017 is also there. So what that notification provides, that the merchant exporter can purchase the goods from domestically, and instead of paying the normal rent, a normal rate of tax, they may pay 0.1% subject to fulfillment of the specified conditions as listed in the respective notification. But similar scheme was not there with respect to compensation cess. So what was happening, the main rate was 0.1%, but the compensation cess was to be paid at full rate. So what has been proposed now is that 0.1% scheme would now be extended even with respect to the compensation cess. So therefore, if there is a merchant exporter, he is dealing in those goods which attract GST as well as compensation cess. So both GST and compensation cess may be paid at 0.1%, and the conditions are laid down in 40 of 17 central tax rate, 41 of 17 integrated tax rate would be required to be fulfilled. Then the next recommendation is with respect to the popcorns. Lot of controversy has arisen. What has been recommended is that if it is a caramelized popcorn, that means containing the sugar, then instead of 5 or 12%, the rate would be 18%. So effectively, there are three rates: normal salted 5%, salted but pre-packed and labeled 12%, and caramelized popcorn 18%. That is what the recommendation is in this meeting, is only with respect to caramelized, that means the sugar coated popcorn, that will be subject to 18%. Another controversy has been on with respect to the tax rate on old and used vehicles. So you may be aware that there is already a scheme called margin scheme, which was notified in 2018, wide notification number 8 of 18 central tax rate dated 25th January 2018, which provided that the GST would be leviable on the margin money only. So if there was a if the If the seller has availed depreciation, then the difference between depreciated value and the sale value. And if no depreciation was charged, then on the difference of the sale value minus purchase value, the GST would be charged. That notification contains different rates for different categories of vehicles. What has been proposed in this council meeting is that the same tax rate of 18%, uniform rate, irrespective of the type of vehicle, whether it is diesel, whether it is petrol, whether it is EV, the size of the vehicle, etc., etc., will not be relevant, and 18% GST would be charged on the differential value. That means the sale value minus purchase value or sale value minus depreciated value, that the GST would be charged on that. That is my understanding of the recommendation of the council. Then the last recommendation, although there are many, but the last important one is that in the cess rate notification 1 of 2017, the entry 52B was substituted with effect from 26 July 23, which talks about the ground clearance of specified vehicles, namely sport utility vehicles and all that. It provided that the ground clearance would be calculated, which would be more than 170 mm in unladen condition. So there were doubts whether this explanation to the ground clearance to be seen in unladen condition, does this have the retrospective effect or only prospective effect? That means from 26th July only, 26 July 23. It has been proposed that it will be clarified that this requirement of seeing ground clearance in unladen condition would be effective only prospectively. That means 26 July 23 only. Coming to the next section, the miscellaneous recommendations. The first recommendation is with respect to IMS, Invoice Management System. You may be aware that the government is proposing to bring IMS. GSTN has already made it applicable, made it available on optional basis from with effect from 1st October 24. Now the rules relating to that, the changes in the law, the changes in the rule with respect to the IMS has been proposed by the council. The recommendation are like this, that the GSTR 2B would be based, now you file one, supplier file one, the recipient gets 2B. Now what has been proposed is that 2B would be generated only after the taxpayer has taken their respective action under the IMS. Then the ITC would be required to be reversed in respect of the credit notes issued by the supplier. Then only the supplier's output liability would get reduced. The rules are also proposed to provide a manner in which the tax liability of the supplier would be determined if he has issued the credit note. And 3B, GSTR 3B would be filed only after filing a generation of 2B. If the 2B has not been generated, the taxpayer would not be able to file the 3B. So the changes in section 39 relating to the returns and the consequential changes in the rules are proposed to be brought into have been recommended to be make changes in the rules and the law. The next recommendation is introduction of trace and track and trace mechanism for specified evasion prone commodities. It is proposed that there would be a unique mark on the goods or packages of such notified commodities which will be visible throughout the supply chain. So it will be called unique identification marking, UIM, and the rule would be amended accordingly. OIDAR service being provided to the unregistered recipient, it is being proposed that the supplier will necessarily be required to record the name of the state in which the recipient, that unregistered person, is located. so that the revenue from those services goes to that state in which the unregistered person is located. And that name of the state would be treated as address on record. Instead of the full address, the name of the state would be treated as the address on record. The last section is with respect to certain discussions which took place in the council, and the press release itself says that the decisions on these points have been deferred. So first one is FSI, how FSI should be taxed or not taxed. The recommend the whether the aviation turbine fuel can be brought into GST or not. That is the second issue which has been deferred. The third is the tax rates on food delivery apps. Presently, there is a dispute going on at what rate the food delivery which is happening through the application, is it exempt or is it subject to GST? And if it is subject to GST, at what rate? So some discussion took place, but the decision has been deferred whether it should be 5% or 18% or exempt. Then certain states intend to levy calamity cess. So how it should be, how it would be worked out, in what manner it can be collected, that discussion took place and decision have been deferred. Then the tax rate on the health insurance and the life insurance, that has been deferred. And the rate rationalization, GOM is already in place. So some discussions apparently have taken place in the council, but the final decision has been deferred. So this is what my understanding of the GST recommendation as we can cull out from the press release. Now we have to wait for the issuance of relevant circulars, notifications, tax rate notification with respect to the rule change. As I mentioned earlier, these can be done by way of a delegated legislation with the approval of the Honorable Finance Minister. But the changes which have been recommended to be made in the law, they would be introduced in the parliament, they would be passed by the parliament, and thereafter the respective SGST acts would be amended by the respective state legislatures, and thereafter only the CGST Act and the SGST Act, the amendment which have been proposed, would be notified from a date as to be decided in future by the GST Council. Thank you so much for uh, giving attention. Thank you.
Thank you so much, sir, for a wonderful deliberation. I hope, just like me, many of the participants today have learned a lot from the deliberation that you have given, the insights that you have given, the deep understanding that you have given regarding the recommendations that have been placed in the 55th GST Council meeting. We'll quickly take some questions, sir. Sir, first question is from Ajay Goyal ji. Why supply by SEZ unit to another SEZ unit cannot be zero rated supply? Why there was need to treat such as non-supply?
See, uh, activities happening in SEZs or custom bonded warehouse or free trade warehousing zones, because these areas, there is a discussion whether they are part of India, they are not part of India. Custom bonded, this exemption was already given to to the transactions happening in the custom bonded warehouse. It was made no supply. So that has been continued, that practice or that policy has been continued, that in all these three areas it would be treated as no supply. And as I mentioned earlier, that if some transactions are happening which have been declared as no supply, if you will read rule 16, 17 and the related rules, you will find that ITC related to those supplies is not denied. The input services, the tax paid thereon, and you avail ITC, but it is not denied. So this is not exempted. This is not zero rated, but it is a no supply.
True.
My mind, that is the way the things are.
Thank you, sir. Sir, there are two queries from Miss Lalita Chaudhary. One query is about forward charge mechanism on sponsorship service. What will happen in case the services is related to government authority? As
On hold,
most
क्या हुआ?
as most of the government services to body corporates are under reverse charge mechanism.
Okay.
So what light has been thrown in the in the press release is that the sponsorship service provided the by the body corporate would be brought under RCM. So to see that what question has been
Hello.
asked by madam is
Hello.
that, you know,
Kajal, Kajal, please put yourself on mute.
so to my mind, you know, we have to wait for the exact rate notification to be issued. Then only we'll come to know the finer details of the uh, details of the recommendation, because we are not privy to discussions or the agenda which was done in the council meeting. So we are just discussing what has been recommended and what has been released for public consumption in the by way of a press release.
Right, sir. So there is another query by Miss Lalita Chaudhary ji. Any updates on natural gas to be brought in GST? This is beyond the council recommendations.
So if, the press release says that the issue relating to ATF was discussed and that has been deferred. So the press release doesn't throw any light on whether the this issue of bringing natural gas in GST fold was discussed or not discussed. So we can't comment on that.
Yes, sir. Sir, there is this one query by multiple participants. One is from Hiral Pala. He asked regarding the GST on old car sale. This is a query that has been asked by multiple participants. GST on old car sale. I believe, with respect to that, the wordings of the Honorable Finance Minister, there is this confusion in the social media regarding the.
So, to my mind, the figures which Honorable FM mentioned, I think she meant other way around.
Yes.
So, effectively, as I mentioned earlier, also there is a notification called margin scheme. I think notification of 8 of 2018, if I recollect correctly, that is what I mentioned. Yeah, 8 of 2018 central tax rate. If you see that notification, it says that the GST would be leviable on margin only, and the margin has been defined in that said notification as the sale price minus the depreciated value if the depreciation was availed, or if no depreciation was availed, then sale price minus the purchase price. And if the purchase price is more than the sale price, then the margin would be taken as nil. That is what that notification says. What from the press release it appears what has been done is that that notification specifies different tax rates for different type of vehicles. For some vehicles it is mentioned as 12%, for some vehicles it is mentioned at 18, and so on. So what has been the indication from the press release is that that rate is sought to be made uniform as 18% on all type of vehicles, whether electron e-vehicles, EVs, whether petrol vehicle, whether diesel vehicle, whether big vehicle, small vehicle. So that is what the intention looks like. As I said earlier, we would come to know the exact thing what has been implemented is only when the rate notification is issued.
Thank you, sir. I don't see any more questions. There is a feedback from Mr. Sanjeev Madan. Thank you, sir, for super presentation. It was a great learning. Topic was explained beautifully in simple words. Other than this, sir, I cannot see any questions in chat box. So I guess there are some messages that we are receiving, sir, regarding your presentation. Everyone praising the beautiful deliberation that you have given.
Thank you.
So, sir, thank you, sir, for the wonderful deliberation. Thank you, Haryana Sales Tax Bar Association. Thank you, Taxodot Online, for organizing such a wonderful deliberation. Um, I guess we can conclude today's deliberation. Sir, there's this one more query just received, sir. Uh, there's this one feedback, sir. It is like reading a poetry from my guru. There's this one query, sir, whether notification number 8 of 2018 is only applicable to those registered persons who are engaged in same line of business, that is sale and purchase of old used vehicles, or for all registered persons.
So, my understanding is, because I was in the ministry at that point in time, to my mind, that is applicable, that only to those persons who are dealing in old vehicles. So the purchasing old vehicle like Maruti True Value and things like that. Because otherwise, for other taxpayers, we have a specific provision whether it is a supply or not. We have to determine in terms of Section 7, and Section 18(6) specifies the manner in which the ITC is to be reversed, and it says that ITC on the percentage value or on transaction value, whichever is higher, and the manner in which it is to be calculated is specified in Rule 40 and 44, I think, if I recollect correctly, of the CGST rules. So, therefore, to my mind, this notification 8 of 18 is applicable only to those taxpayers who deals in the same line, the vehicles, the old and used vehicles.
Thank you, sir. There's one more question from Mr. Rajesh Advani ji. Please give example as to when unregistered person can pay tax.
Unregistered person can pay tax. For example, the goods are caught during transit. Now, the uh, the owner of the goods is registered only in Delhi, but the goods get caught, say, in UP. So in UP he is not registered. Now in UP he has to pay penalty under the CGST Act read with UP GST Act. So there he is an unregistered person in UP, though he is registered in some other state. So how does he pay the tax in UP? So for that, this provision is there. Even today, the officers in the field are giving them temporary registration number so that they can make the payment, and thereafter can file appeal also before those authorities, because the appeal has to be filed in this example before the UP, under the UP SGST Act only, because generally the transit checks are done by the state officers, not by the central government officers. So therefore, probably, this is one example. There can be a number of examples. For example, he's unregistered, he's indulged in clandestine removal. So, after investigation or during the course of investigation, he will obtain registration. But before taking the registration, if he has to pay some tax, how does he pay the tax? So, that is another example. Or for example, the recovery proceedings, I have to pay the tax, I am not paying tax, some amount is due from you. Now the department says you pay the tax on my behalf. So how do you pay the tax? You are a unregistered person. So that also, probably this provision can be used.
So there's this one query from Mr. Lalit Garg. Change in plant or machinery to plant and machinery will take effect immediately, or it is proposal to do so.
The council has recommended that this amendment would be done with retrospective effect from 1st July 2017. So the law would be amended. As I mentioned, the law amendment would be moved through, as per the practice, through finance bill. It will become finance act after it is passed by the parliament. Then the respective SGST acts would also get amended. But whenever it get notified, it will get notified with retrospective effect. So effectively, it is from 1st July 2017, and one should presume that it is existing today if the amendment is moved in the finance bill. After all, this is a recommendation of the council. It has to be converted into legal thing by way of introduction of CGST Act amendment in the parliament.
Sir, there are two, three questions that we have just now received. We'll take only these questions last. Nidhin Das CPG asked regarding the old and used vehicle, if a registered person who is not in the second-hand vehicle business bought a second-hand car or lorry and sold the same vehicle after a few years, claiming depreciation, how the taxation will come?
So, as I mentioned earlier, you have to see section 7 whether it is a supply, and you have also to see section 18 subsection 6 of the CGST Act, which talks about the reversal of ITC on capital goods on which ITC has been taken and are being sold before completion of 60 months, because CGST Act provides the life cycle of any capital asset as 5 years. So that law you have to see section 7 plus para 1 of schedule 1 plus section 18(6) plus rule 40 and rule 44.
So this is another query from Mr. Lalit Garg ji. As far as amnesty scheme regarding 9C, is there any relaxation in fees if by mistake GSTR 9 for earlier years has not been filed?
See, the amnesty scheme as mentioned or as provided in the press release says that there are two conditions for this amnesty scheme. One is that GSTR 9 has already been filed. Second is it is for 17-18 to 22-23. And the third is it has to be filed by 31st March 25. This is what the press release says. Now again, I would request to wait for the actual notification so that we know what the exact conditions are. But the press release indicates this only.
Sir, Mr. Utkarsh Singhal ji asked, Sir, just a confirmation that in Prayagraj, every possible hotel has a rate beyond 7,500 because of Kumbh. Hence, by virtue of the recommendation, restaurants inside the premises will have to charge 18%.
See, this proposed change in the restaurant uh, rates and all, what has the press release says that they would be implemented from 1st April 25, not from today. So till 31st March 25, the concept of declared tariff, the concept of specified premises continues. The new regime would take effect from 1st April 25. So today in Prayagraj, if the rate is more than 7,500, then the restaurants located in such hotels obviously has to charge GST at the rate of 18%. That is what the law is according to me.
So last query, we'll take up last query by Miss Lalita Chaudhary ji. For rupees 7,500 threshold limit, actual tariff of preceding year or actual tariff at the time of supply to be considered?
The press release says that if any room, they have said unit of accommodation, if any unit of accommodation, that means room, in the entire year has been rented out for more than 7,500, even one room in the entire hotel, then 18% with ITC. If less than that, it is 5% without ITC. That is what the press release says. And again, I am requesting that we have to wait for the issuance of the relevant circulars, notifications. Then only we can be sure that what we are talking or what is being implemented or what has been done. Because they are just mere recommendation. Today, they are only recommendations. We can't take and we should not take any call in changing our business model based on this limited information only which is contained in the press release. That is my advice.
Thank you, sir. So we have taken a lot of queries. So thank you once again, sir, for wonderful deliberation. And thank you to the Taxer Online for organizing such a wonderful deliberation.
Thank you very much.
Thank you, sir.